Good day, welcome. Grab your pens and books. Let's get ready to conquer this CSEC business exam.
Plus Business course for the CSEC exam. This comprehensive course is designed to cover both the theoretical and practical aspects of various business activities. As students and teachers, you will have the opportunity to enhance your knowledge and critical thinking abilities. Throughout this course, we will dive deep into a range of topics that not only provide a solid understanding of business principles, but also foster um, amazing journey. You will learn about ethical, legal and social and economic responsibilities within the organizations. By exploring these topics, you will develop a well-rounded perspective on the role of businesses in society. So we start with the various concepts of business principles and we ask the question, what is a business? A business is an organization or enterprising entity engaged in commercial, industry, or professional activities. Businesses have an aim of generating profit. Profit is again total revenue take away total expense equal profit. Carrying out this business activity, buying, operating or producing something. Non-business organizations are formed for purposes other than making a profit. They focus on charity, educational, religion, or social causes. They often rely on donations. Businesses can take different forms. The nature of business include sole proprietorship, partnership, corporation. Business activities involve various activities such as producing and selling goods or services, interacting with customers, managing resources, and making decisions. We ask questions such as, where are we now? Where are we going? What is going to get in our way? What do we need to do to get to where we want to go? Apart from making profit, the owner's desire, the primary goal of a business is to create value by meeting the needs and desires of customers through the provision of products or services. This value creation is achieved by combining the factors of production such as land, capital, labor, enterprise, raw material, and technology to produce goods or deliver services that are in demand. The business owner firstly establish boundary by preparing business plan, doing their market research. The business environment is usually competitive, hence the business may face challenges and opportunities. They must consider factors such as market demands, compet- competition, government regulation requirements, technology, economic conditions, and customers' preference to develop effectively and achieve success. We will be discussing the ethical and legal issues in establishing and operating a business. All businesses need guidelines. The business code of ethics should be enforced. A business code of ethics is a set of guiding principles and values that guides decision making and behavior within an organization. It's important for each organization to tailor its code to its specific industry, values, and goals. Codes of ethics should be regularly reviewed, communicated effectively to employees, and enforced consistently to maintain their effectiveness. The Business Code of Ethics, also known as a Code of Conduct or Code of Business Ethics, these codes serve as a framework for decision making and guide employees, managers in maintaining integrity, responsibility, and fairness in all business operations. While specific codes may vary between companies, industries, and countries, some common elements found in many business code of ethics are honesty and integrity, fairness, respect and dignity, compliance with laws and regulations. Please pause the video and read the notes. Thank you, students. Conflict of interest. Identifying and avoiding conflicts of interest that could compromise the objectivity and fairness of business decision. Confidentiality and privacy. Social and environmental responsibility. Anti-corruption and bribery. Responsible use of resources, ethical marketing and advertising, very important. This is committing to truthful and ethical advertising and marketing practice, avoiding false or misleading claims, and respecting the rights of consumers. Health and safety, ensuring a safe and healthy work environment, complying with occupational health and safety standards, and providing necessary training and resources to protect employees. Social responsibility and community involvement, engaging in initiatives that contribute to the well-being of the community, supporting social causes, discuss the ethical and legal issues in establishing or operating a business. So we have the ethical, as we spoke about, respect for others, open communication, taking responsibility, fairness, corporate social responsibility, honesty and transparency, suppliers and customers relationship, employee well-being, legal issues, business structure and registration, contracts and agreement, intellectual property protection, employment laws, taxation and financial reporting, consumer protection, environmental regulation. And we discuss them further here, guys. Please pause the video and read through. Employee well-being very important. Creating a safe and healthy work environment, promoting work and life balance, respecting employee rights, and providing fair wages and benefits are important. Ethical responsibility. Ethical responsibilities, very, very important, students. So we have here business structure and registration, selecting the appropriate legal structure for the business, such as sole proprietorship, partnership, corporation, or LLC. So we are talking about registering the business with the appropriate government authorities and complying with registration, licensing, and reporting requirements. Employment laws, complying with labor laws and regulation relating to hiring practice, employee classification, working hours, minimum wage, overtime, workplace safety, and anti-discrimination laws. Please pause the video and read through. Discuss the consequence of unethical and illegal business practice. Unethical and illegal business practice refer to actions or decisions that goes against accepted moral principles of standard. Engaging in such behavior can have significant legal or negative consequences for businesses in the future. False or misleading claims, not delivering product and service that are paid for, taking advantage of misfortune, lying, kickbacks, money under the table, child labor, false product claims, hidden terms in users' agreement, unethical accounting, poor working conditions, sexual harassment, unfair competition, defamation, selling customers' data all wrong, unethical and illegal business practice, if defined. Unethical and illegal business practice can lead to violation of laws, regulations, or industry standards. As a result, businesses may face penalties or fines imposed by regulatory bodies or government agencies. Expensive lawsuits, reputational damage. So we're on to another chapter, explain some functions of management. Management utilize their core function in the creation and realization of organizational goals. Planning involves setting organizational goals, defining strategies, and developing action plans to achieve those goals. It involves analyzing the current situation, anticipating future changes and challenges, and making decisions about resources allocation, task timeline, and priorities. Planning provides a roadmap for the organization and guides decision making through the management process. The various concepts of business principles discuss different leadership styles in an organization, describe the strategies for conflict resolution within an organization, outline three reasons that one needs to prepare a feasible study and to prepare a business plan. So we start with the three leadership styles in an organization. Autocratic leaders make decisions without much input or participation from their team members. They exercise a high degree of control and authority over the decision making process. This style can be effective in a situation where quick decision and strong directions are required, but it can also lead to reduced creativity and motivation among team members. We have a democratic leader involve their team members in the decision making process. They seek input, ideas, and feedback from their team and consider different perspectives before making decisions. This style promotes collaboration, engagement, and empowerment within the team. Describe the strategies for conflict resolution within an organization. Conflict resolution is in business refers to the process of managing and resolving conflicts or disagreements that arise within an organizational settings. Effective conflict resolution is essential for maintaining a healthy and productive work environment, fostering positive relationships among employees, and ensuring the smooth functioning of the business. Recognize and acknowledge the conflict. The first step is to identify that a conflict exists and acknowledge its presence. Ignoring or downplaying conflicts can make them escalate and create more. Understanding the underlying causes is critical to understanding the root cause of the conflict. This involves listening to all parties involved, gathering information and considering different perspectives. By understanding the underlying issues, you can address the conflict effectively. Promote open communication. Encourage open and honest communication among the parties involved in the conflict. Create a safe and respectful environment where individuals feel comfortable expressing their concerns and emotions. Active listening is key during this process. Seek a win-win solution. Strive for a solution that satisfies the interests of all parties involved. Look for common ground and areas of compromise. Encourage collaboration, problem solving, and brainstorming to find creative solutions that benefit everyone. Mediation or facilitation. In some cases, it may be beneficial to bring in a neutral third party to mediate or facilitate the conflict resolution process. This person can guide the discussion, maintain objectivity, and facilitate constructive dialogue. Develop clear agreement. Once a resolution is reached, document the agreed upon solution and expectation. Clearly define the roles and responsibility of each party moving forward. This helps prevent misunderstanding and ensure accountability. Monitor and follow. After the conflict has been resolved, monitor the situation to ensure that the agreed upon solutions are being implemented. Follow up with the party involved to address any lingering concerns or potential relapse. Foster a positive work culture to prevent conflicts from arising in the first place. Create a positive work culture that promotes open communication. collaboration and respect, encourage teamwork, provide opportunities for professional development, and address conflicts or issues as they arise. Conflict is a mutual Conflict is a natural part of any organization, and not all conflicts can be completely eliminated. However, by effectively managing and resolving conflicts, businesses can minimize their negative impact and turn into opportunities for growth and improvement. So we have outlined 3 reasons that one needs to prepare a feasibility study, and to prepare a business plan. One, business feasibility studies. This is a different topic, different chapter, or we are looking at business feasibility studies or assessments conducted to evaluate the viability and potential success of a proposed business ventures. They study, analyze various aspects of a business idea to determine its feasibility and provide insight into the risk, opportunity, and potential outcome. Businesses need to conduct feasibility studies to evaluate the financial aspect of the business, including startup costs, operating expenses, revenue projections, and profitability. They also need to conduct a break-even analysis and consider factors like pricing, sales volume, and profit margins. By assessing the technical requirements of the business, such as production, processing, technology, infrastructure, equipment, and facilities, they can determine if the necessary resources and expertise are available or can be acquired. Businesses need to conduct feasibility studies that lead to the preparation of SWOT. They can evaluate and conduct a comprehensive analysis of the business strengths, weaknesses, opportunities, and threats, SWOT, and identify key internal and external factors that may impact the success of business ventures. In addition, the business needs to investigate the legal requirements relevant to the business, including license, permits, certification, and compliance obligation, and determine any potential legal constraint or barrier to entry. So we are here looking at the business plan. We are going through the full CSEC syllabus for the business study exam, and we are at the business plan. The first reason to write a business plan is to establish a written document that outlines the goals, strategies, and operational details of a business. It serves as a roadmap for the company, providing direction and guides for both internal management and external stakeholders. An executive summary should be written to give a concise overview of the business, highlighting its missions, key objectives, and highlights from the rest of the plan. This section should capture the reader's attention. After the business description, there should be written should be written to provide a detailed description of the business, its legal structure, ownership, history, and any unique advantage or factors. It also outlines the product or service offered on a target market. Conducting a thorough analysis of the target market, including its size, growth potential, customer demographic, needs and behavior, evaluating the competitiveness and market trends to identify opportunities and challenges. Describe the organizational structure of the company, including the key management team and their roles and responsibility. Outline any necessary hiring plans and explain the expertise and experience of the team members and detail information about the product or service offered, their features and benefits. Also explain the market and sales approach to reach the target market, acquire customers and promote the product or service, including pricing strategies, distribution challenges, channel advertising plans, and customer retention. So we have distribution channels. Business plans should be written to assert the financial projection of the business. Detailed financial information include historical financial data, that is, if it is available, and future projection. Include income statements, cash flow statements, balance sheets, and key financial documents. Consider different scenarios and assumptions. If seeking external funding, clearly state the amount of funding required and how it will be used. The business plan should explain the potential returns on investment and the proposed terms for investment or lenders. It should outline the specific action steps and timeline for launching and operating a business and include key milestone tasks and responsibilities and discuss any operational considerations and requirements. The business plan should be written to acknowledge the risks and analysis of the business. So wanted to ascertain all these factors, hence identifying and assessing potential risks and challenges that may affect the success of the business. Develop strategies and contingencies. So we have to develop plan B to mitigate these risks. So we have to put supporting documents such as resume of key team members, market research data, product service, permit or license, legal documents, and additional financial information. A well-crafted business plan serves as a comprehensive document that demonstrates the viability of potential of a business. It is essential for attracting investors, securing loans, and guiding the company growth and development. The plan should be dynamic and adaptable, allowing for updates and revision as the business evolves. Concept of simple contract and business documents. Differentiate between a simple contract and a specialty contract. Outline how to terminate contracts. So we have your about contracts we will be looking at. The contract must have a seal affixed to it. Traditionally, a seal was an impression made on wax of a wrapper attached to the contract. However, modern laws often recognize other forms of seals, such as a printed or stamped seal or a specific mark indicating the intention to create a specialty contract, a formal contract in a specific type of contract that required a formal seal or some form of written or printed mark to give it legal effect. Unlike a simple contract, which can be made orally or in writing, a specialty contract must have this addition formally element. Let's read again. A specialty contract must have this additional formal element to be enforceable. License agreement are contracts that grants permission to another party to use intellectual properties such as trademark, patent, or copyright material in exchange for royalty or licensing fees. Employment contract. These contracts are used These contracts are used when hiring employees and outline the terms of employment, including job responsibilities, compensations, benefits, working hours, termination clauses, and any other relevant terms and conditions. Lease agreement are contracts used when renting or leasing property or access. They outline the terms of the lease, including the duration, rental, payment, maintenance responsibilities, and any restriction or conditions. Franchise agreements are contracts used when granting the rights to operate a business under a franchise established brand and business model. These contracts outline the obligations, fees, and the guidelines. So we are on to simple contracts. A simple contract is a legally binding agreement between two or more parties. So this simple contract, something is done or promised to be done. It is enforceable by law. This is what differentiates a contract from an agreement made by word of mouth or in writing. It can also outline the rights and obligations of each party and specify the terms and conditions of their agreement. Eating at a restaurant, taking a taxi, buying from a vendor. Characteristics of simple contracts: offer, acceptance, consideration, possibility, authority, intention to create legal relation, certainty. These characteristics collectively contribute to the validity and enforceability of a contract. Offer. An offer is a proposal made by one party or another expressing a willingness to enter into a legal binding agreement. It must be clear, definite, and communicated to the other party. Acceptance is the agreement by the other party to the terms of the offer. It must be unconditional and communicate to the offerer. Once the offer is accepted, a binding contract is formed. Consideration refers to something of value exchanged between the parties as part of the contract. It can be money, goods, service, or a promise to do or refrain from doing something. Consideration ensures that both parties have something at stake and provides the basic for enforcing the contract. Capacity refers to the legal ability of a person to enter into a contract. Generally, individual must be of legal age, usually 18-year-old, mentally competent and not under the influence of drugs or alcohol to have the capacity to enter into a contract. Possibility: a contract must be capable of being performed. The obligation and promises stated in the contract should be physically and legally possible to fulfill. Contracts that involve illegal activities or impossible tasks are void. Authority refers to the legal power or rights of a person or entity to enter into a contract. It ensures that the parties involved have the necessary authority to represent themselves or the organization they are acting on behalf of. Intention to create legal relation. For a contract to be valid, there must be an intention by the parties to create legal relation. This means that the parties involved intend for their agreement to be legally binding and enforceable by law. Contracts made in a social or democratic or domestic context may lack this intention. Certainty: a contract should have clear and certain terms. The essential terms such as the subject matter, price, and time of performance should be specific and not vague or ambiguous. Certainty ensures that the parties know what they are agreeing to and help in resolving any dispute that may arise. Please pause the video and read this section from the students. Thank you. So we are outlining how to terminate contracts. Terminating a contract can be a significant decision, so it's essential to consider the terms and conditions outlined in the contract itself. Terminating a contract refers to the act of ending the legal obligation or rights established under the contract. Lapse of time by debt performance, terminated by frustration, breach the contract. Lack of time, lapse of time. A contract may specify a specific duration or it may expiration date may be included in the contract. When the contract reaches the end of its agreed upon term, it is terminated by the lapse of time. Right here, at this point, the parties are no longer bound by the terms of the contract. That if one of the parties involved in the contract passes away, the contract is terminated. This is because contracts are generally considered to be personal agreement, and the death of a party fundamentally alter the ability to fulfill the contract obligation. Performance. When both parties have fulfilled their respective obligation under the contract is terminated through performance. This means that all agreed upon tasks, parties, or payment have been completed satisfactorily and there are no remaining obligations. Termination by frustration. Sometimes unforeseen circumstances may arise that make it impossible to fulfill the contract. This is known as frustration of the contract. If an event or circumstance occurs that fundamentally alter the nature of the contract or makes it impossible to perform the contract may be terminated by frustration. A breach of contract. If one party fails to fulfill their obligation as outlined in the contract, it is considered a breach of contract. This can occur through non-performance, inadequate performance, or any violation of the terms and conditions of the agreement. When a breach occurs, the non-breaching party may have the right to terminate the contract and seek remedies for the damage caused by the breach. A contract can be a significant decision, so it's essential to consider the terms and conditions outlined in the contract itself. Terminating a contract refers to the act of ending the legal obligation and rights established under the contract. Review the contract. Carefully read through the contract to understand the terms, conditions, and any provision related to termination. Look for any specific instructions or requirements regarding the termination process, such as notice, period of penalties. Identify grounds for termination. Determine the grounds on which you wish to terminate the contract. Common reasons for terminating include a breach of contract by the other party, failure to fulfill obligation or mutual agreement to terminate. Notice period. Check if the contract specifies a notice period for termination. If a notice period is required, make sure to provide written notice within the time frame. The notice period is typically mentioned in a contract and serves as a buffer period before the termination takes effect. Communicate your intention. Notify the other party in writing of your intention to terminate the contract. Clearly state your reason for termination. Reference the relevant section of the contract and indicate the effective date of termination. Document the process. Keep a record of all communication, including email, letters, or any other form of written correspondence related to termination. This documentation can be useful if any dispute arises in the future. Negotiate and settle any outstanding matter. If there are any outstanding issues or obligations, try to negotiate a resolution with the other party. This could involve discussing financial settlement, returning property, or any other necessary arrangement to conclude the contract. So we're on to another topic right here. So we're on to the concept of marketing. Explain some factors that influence consumer behavior in any market. Discuss the role of packaging, labeling, and branding. Analyze some rules and forms of customer service. Concepts of marketing. A market refers to a physical or virtual space where buyers and sellers come together to engage in the exchange of goods, services, or resources. Market participants include both buyers and sellers who interact to conduct business. Buyers have specific needs or wants and are willing to pay a certain price for a product or service, while sellers aim to fulfill those needs for by offering goods or service at a price they find profitable. The forces of supply and demand play a fundamental role in a market. Supply represents the quantity of a product or service that sellers are willing to offer at various price, while demand represents the quantity that buyers are willing to purchase at various price. The interaction between supply and demands determine the equilibrium price and quantity in a market. Prices in a market serves as a mechanism to coordinate and balance supply and demands. Buyers and sellers negotiate and agree upon prices that are mutually acceptable. Transactions occur when buyers and sellers reach an agreement on price and quantity, leading to the exchange of goods or services for money or other form of payment. Brand loyalty relates to consumer preference for a particular brand and their inclination to repeatedly purchase product or service from that brand over time. Marketers aim to cultivate brand loyalty through various strategies such as delivering consistent quality, providing exceptional customer service, offering loyalty program, and creating emotional connection with consumer. So you create emotional connections with consumers. Understanding the factors that drive brand loyalty help marketers build long-term customer relationship and foster the brand. Market segmentation involves dividing a brand target market into smaller distinct groups of consumers with similar characteristics, needs, and behavior. By segmenting the market, marketers can tailor their marketing efforts to specific customers segment, creating more targeted and relevant messages and offers. Market segmentation allows for more efficient resource allocation and better understanding of customer behavior within each segment. So we have explained some factors that influence customer behavior in a market. Factors that influence customer behaviors are crucial to understanding how and why individuals make purchasing decisions. So we have pricing, and this determines the appropriate pricing strategy for a product or service. Is an important marketing decisions. Pricing strategies can be based on factors such as production cost, competition, value, perspective, or market demands. Pricing should align with the perceived value of the product or service to customers. Competitive analysis. Analyzing competitors' pricing strategies is crucial to ensure competitiveness in the market. Companies need to consider factors such as the quality of their offering compared to competitors, market demands, and pricing trend within the industry. Pricing strategies. These are several pricing strategies companies can employ, such as cost plus pricing, adding a markup to the cost of production to determine the selling price, market penetration pricing, setting a low initial price to gain market shares and attract customers. Psychological pricing, using pricing technique like charm pricing, 99 instead of $10, or pricing basic standard premium to influence consumer perception. Dynamic pricing, adjusting pricing in real time based on factors such as demand, supply, time of purchase, or consumer segment. Pricing segmentation, the market and tailoring pricing to different customer groups can be effective. Customers in different segments may have various price sensitivity or preference, allowing companies to optimize their pricing. Brand loyalty relates to consumer preference for a particular brand and their inclination to repeatedly purchase product or service from that brand over time. Marketers aim to cultivate brand loyalty through various strategies such as delivering consistent quality, providing exceptional customer service, offering loyalty programs, and creating emotional connection with consumer. Understanding the factors that drive brand loyalty help marketers build long-term customer relation and foster brand advocacy. Price of substitute. The price of alternate product or service plays a significant role in consumer behavior. If the price of substitute is low, consumer may opt for those alternatives instead, impacting their buying decisions. The quantity, perceived quality of a product or service can heavily influence consumer behavior. Consumers are often willing to pay more for higher quality items as they believe it will provide better value and meet their needs more effectively. Taste, personal preference and taste preference influence consumer behavior, especially when it comes to products like food, beverage, clothing, and entertainment. Different individuals may have distinct tastes, which can significantly impact their buying decisions. Tradition, culture, and tradition influence shape consumer behavior. Certain product or services may hold cultural significance or be deeply rooted in tradition, influencing consumer choices to uphold or um, to uphold from these traditions. So we have income, affordability, and we have spending pattern. So here we have another chapter discussing the role of packaging, labeling, and branding. This is on page 44.